This is episode 65 of the Rohit Radio Show. I am your host Rohit. This is part 3 of the 3-part video series that I am doing on the topic of investing for beginners. In the first 2 parts, we looked at real estate and businesses. In this third part, which is the last part, we are going to look at commodities and paper assets. Let's begin. Now, before we get into the topic, I want to invite you to come and attend my free Financial Freedom Masterclass, in which I teach people how to escape the 9-to-5 rat race in less than 5 years. The masterclass is 100% online. It is free. You can do it from anytime, from anywhere in the world. Thousands of people from all over the globe have already done this masterclass and they have benefited from it. I will put the link in the description box. Go check it out. I am sure it will help you. Coming back to the topic, this is part 3 of the 3-part video series that I am doing on the topic of investing for beginners. In the previous 2 weeks, we looked at part 1 and part 2. Part 1 was about real estate as an asset class. Part 2 was about business as an asset class. As I said earlier, there are 4 broad asset classes that we can invest in to achieve our goal of financial freedom: real estate, business, paper assets, and commodities. In this part 3, I want to talk about commodities and paper assets. Now, if we look at commodities, there are 4 ways to approach investment in commodities. The first way is produce and sell. The second way is buy and sell offline. The third way is buy and sell online. And the fourth way is buy and hold. Let's look at all of these briefly. First is produce and sell. So basically we are talking about a farmer here. So a farmer has got land and he's investing his money into the land and he's producing crops and he's selling that crop into the market. As long as the proceeds that he receives from that produce is more than the maintenance cost and all other costs of running the farm, he is making a profit and his farm is making money for him. Now, I want you to understand this point is because the farmer could have chosen to invest the money that he has invested in the farm and taken that same money and invested that money into mutual funds. But he's not doing that. Why? Because he knows that his farm is going to give him a much better return on equity invested in the farm. Plus, the farm is going to give him the cash flow that he needs to take care of his family, to fund his lifestyle. A lot of people I see are starting indoor farms these days. There is some concept called as hydroponic system where you can do some indoor farming. So that's about producing and selling a commodity. As long as that activity produces a profit for you, it makes sense to invest your time, money, energy, and ideas into that. Most people don't even look at this option because whenever we talk about investments, we are talking about fixed deposits and mutual funds and all of that. But please understand that if you have, let's say, 5 lakh rupees, you could choose to invest that 5 lakh rupees in a mutual fund, or you could choose to invest that 5 lakh rupees creating an indoor farm, which might become a huge business in the future. And a lot of people have done that, okay, which is what I call the agri businesses. So please understand that mutual fund is not the only way to invest. I have already spoken about real estate, business, and I'm now talking about commodities, and you don't need much money to get into all of these asset classes. But traditionally, conventionally, what people think of investments as, okay, they have some spare money, they put it into mutual funds and that's it, we are done. No, as I said earlier in part 1, money is only one resource you have. You have 3 other resources. You have time, money, energy, and ideas. These are the 4 resources that you have. When you are putting your money in mutual funds, you are only utilizing one of those resources, which is your money. You are not utilizing your time, your ideas, and your energy, which is what you can do with commodities. That is the reason why the farmers, the indoor farmers are making money. People in agriculture are making money because they can generate cash flow from it. They are not only investing their money, they are also investing their time, their energy, their technical know-how, technology as well. So first way of looking at commodities is producing and selling. The second way is buying and selling offline. Here we are talking about the world of wholesalers and retailers. What are they doing? They are buying, say, 1 ton of rice, and they are selling that 1 ton of rice or wheat forward, and they are trying to make a profit in between. That is called as offline buying and selling. Your local kirana shop or grocery shop, your local stationery shop, what do? They are just buying and selling things, and they are trying to make a profit. Now imagine a stationery shop. If you count the inventory in that stationery shop, it would easily come to more than 5 lakhs or 10 lakhs if you speak to a stationery guy. Now he could have chosen to invest that 10 lakh rupees into a mutual fund, right? But why is he not doing that? He's not doing that because he knows that 10 lakh rupee investment, if he keeps turning it over, which is called as working capital, the more he turns it over, the more cash flow the business generates. The more cash flow the business generates, the better he can take care of his family. So the business where he's investing his time, money, and energy and ideas is giving him livelihood. So anything that gives you livelihood is obviously giving you a higher rate of return on your invested capital, right? If I invest that 10 lakh rupees in a mutual fund, I can't expect that mutual fund to earn me my livelihood. Please understand this. So mutual fund is not the only way to invest. There are other ways to invest as well, which is buying and selling of commodities offline. Number 3, buying and selling of commodities online. Here we are talking about the online trading world, the futures contracts, the options contracts. In India, there are 2 exchanges, MCX and NCDEX. NCDEX is for agri commodities. MCX is for metals and energy and coffee and things like that. So for that, you need to become a good trader. Now, this field is very technical. Not many people go there. It also requires a little bit of capital, and you need to understand the concept of reward to risk when you are trading. And commodities are a very volatile asset class when it comes to online trading. So if you want to get into this, you have to learn from a professional commodity trader and then get into it. And there is a lot of risk involved here, because unlike stocks where I can buy a stock and hold it in my demat account, that's not the case with commodities. In commodities, there are futures contracts and there are time limits on how long you can hold the contract, after which you have to exit the position. So you can't hold it forever. So that is why you have to square off these contracts, and you better know what you are doing with all of these things. So get trained if you want to get into buying and selling of commodities online. Number 4 is buy and hold of commodities. So here I am talking about things like gold and silver. I can buy a gold ETF or a silver ETF, or I can buy a gold coin or a silver coin, and I can just hold on to it. These are commodities, right? I am not holding that in my demat account. Although I can hold a gold ETF in my demat account, but these are commodities which are metals, which I can buy and hold because it's kind of a store of value. It can also protect me from inflation, because inflation all across the world is going up these days. So buy and hold can also be done in certain commodities. So those were the 4 ways: produce and sell, buy and sell offline, buy and sell online, and 4th is buy and hold. That was about commodities. So have a serious look at commodities. There are a lot of people that do it. Let me give you an example. I have a neighbor, he belongs to the Marwadi community. One day he got a call from one of his distant relatives, and this relative says that he wants to buy, let's say, 10 lakh worth of chocolates. Now, this relative is just 25 years old. Now, as you know, in India, the Marwadi community is they have a very entrepreneurial mindset. Now, a 25-year-old guy Instead of putting 10 lakhs into mutual funds, he wants to buy chocolates of worth rupees 10 lakhs so that he can buy those chocolates and sell them at a higher price. Maybe he wants to sell those 10 lakh rupee worth of chocolates for 12 lakh rupees and make that profit. So that is called as entrepreneurship. So he knows that mutual fund is not the way to make money, to make cash flow from an investment. So that is why I'm saying have a serious look at commodities as an asset class. There is money to be made here. One book I would like to recommend here about commodities, which is easy to understand, is Hot Commodities. The title of the book is Hot Commodities, written by Jim Rogers. Jim Rogers by far is the best person to learn from when it comes to commodity space. One great advantage of commodities is that commodities cannot go bankrupt. See, if you buy a stock of a company and the company goes bust, your investment is gone, your equity is finished. But if, say you buy gold, gold cannot go bankrupt, silver cannot go bankrupt. You buy coffee cannot go to zero, right? Coffee will always have some price. Natural gas will always have some price. So please understand that although commodities are volatile, but the risk of insolvency or bankruptcy is very low. Anyways, coming to the fourth asset class, which is the most disliked asset class. I don't like this asset class, which is paper assets, basically stocks, bonds, fixed deposits, mutual funds. This is what the whole world wants you to buy. They keep advertising, buy mutual funds, fixed deposits. See, whenever you see advertisements which is asking you to invest in something, that's probably not good for you. So that's where paper assets belong. And I will not talk much about this because you know all of this is already been propagated a lot. And the rate of return on these investments is generally lesser than real estate, business, and commodities. So the problem with paper assets is that, as I said, there are four resources we have: time, money, ideas, and energy. But when it comes to paper assets, out of four, we are only investing one, which is money. We are not investing time, energy, and ideas. If I make a fixed deposit in a bank, I'm not investing my time there. I'm not investing my ideas there. I'm not investing my energy there. That's why the return is low. Please understand this. Wherever I am not investing my time, ideas, and energy, my return is going to be low. Okay? So that's paper assets for you. So overall, I would like to summarize from this 3-part video series is that there are 4 asset classes: real estate, business, paper assets, and commodities. I recommend that you start with one. Don't try to study all the asset classes. Pick one. Although paper assets is the least return, but I like paper assets. This is what interests me. There are 2 ways to invest in paper assets. One is the active way and one is the passive way. Passive way doesn't give you much return. I will make separate video on this. But active way, there is return to be made. So I like paper assets. So that is why I choose paper assets over real estate. So I recommend that you start with one and then you diversify. I started with business, then I diversified into paper assets. In the next 5-10 years, I will diversify into real estate and commodities as well. So it takes time to learn about a particular asset class. I would recommend that you spend at least 3 years in one particular asset bucket of the 4 that I have mentioned. Now, what do the rich people do? The richest people in the world start with business as an asset class. They take the profits of that business and put it into real estate. They take the rental income from the real estate and put it in commodities. And then whatever they earn from commodities, that is diverted to paper assets. So that is their order of preference. The richest people in the world have done this. Robert Kiyosaki, Warren Buffett, George Soros, Jim Rogers. Start with business, then real estate, then commodities, and then paper assets. So that is what I wanted to cover in this 3-part video series. I hope you got value out of this. I hope that you can think about investments in a different way. I hope I was able to expand your investment horizon, because the way the traditional media projects investments is that they make us feel that if you want to invest in anything, mutual fund is the only way to take exposure to different asset classes. But that's not true. as we have discussed all of this in this 3-part video series. Again, that's what I wanted to cover in this small series. I will create a separate playlist, and these 3 videos will be available on that playlist so that you can go back and watch these 3 videos again, so that you can get more insights. If you watch something twice, we get more insights. And one thing I also wanted to share, that this video series is very important for me, because this is the first time I am doing non-scripted video. I just have my outline here. So these are the 3 videos which I have not scripted. I am speaking directly from my heart. I just have some rough outline here. So in the future, I plan to make videos which are unscripted. I can speak from my heart. I can speak impromptu. And I enjoy this process. I have enjoyed creating these 3 videos, and it has been a learning experience for me. I hope it is a learning experience for you as well. Anyways, I will not take much of your time. Again, before you go, I want to invite you to come and attend my free financial freedom masterclass, in which I teach people how to escape the 9-to-5 rat race in less than 5 years. And all of these asset classes are covered there. The masterclass is 100% online. It is free. You can do it from any time, anywhere in the world, whenever you like, as per your convenience, from the comfort of your home. Thousands of people from all over the globe have already looked at and done this masterclass, and they have benefited from it. They are on my email list. So I email them these episodes every single week on a Thursday. So if you want to join my email list, this is another way of joining. Have a look at my free financial freedom masterclass. It is 1 hour worth of automated webinar. That is why, since it is automated, you can do it from anywhere in the world, anytime you want. I will put the link in the description box below. Thank you so much for your time. Thank you so much for your patient listening. I hope you got value out of this. Take care. Thank you so much. I will see you next week.